Okay, good morning. It's afternoon, it's 1 o'clock. Today is December 18th. It's Monday. We're going to go over the daily range. I'll show you that. We lay out the premium and discount, high time frame turning points. We'll look at the 1 hour PD arrays, the 15 and 5 minute breakers, and then the time of day execution for the morning session, which is the only thing I trade. So let's just dive into that. First thing I want to look at is there we go. First thing I want to look at is that this is a weekly journal, and I'm concerned with getting a template. There's no significant news this week. We're opening on Monday's session above the new week opening gap in overall high time frame, meaning weekly and monthly bullish conditions. There's nothing risked or gained here. Unknown weekly template because it's Monday. There's no news today. We're above the new week opening gap. I'm just simming. I'm watching. The Asian session liquidity had been taken sell side, and then we displaced higher. So that opens me up to looking for breakers in high time frame PD arrays in discount in that area. And so that makes my bias early long. There's a clean draw above us, and it did not check risk flows. As you look at 10 o'clock, you see clearly, we'll start from the top left hand. You see my premium discount relative to the daily range. And in relative discount, and by the way, mean threshold or, whatever, equilibrium would be right at the red. So this area down here is all discount. That's not correct. That's not correct. Right here is your equilibrium. So we're opening up in discount, but not super discount. And that told me we could push down lower, and I guess that would be okay. But we're in discount, so we just have to respect what it says. Then as I tell the story, you look at the left 15-minute time frame, and what do you see? We open up inside of the previous afternoon session. Asian session goes in, breaks the high. London session opens up and takes out the low. So you'd think anybody that got long here is now underwater. And what happens? Who do they want to punish? Anybody that sold up here or anybody that bought down here? Who do they want to punish? Well, it appears to me that after we displace higher here, that they want to punish the sellers. So anybody that shorted here, all that, they're going to want to punish this. And why? Because you've got clean looking highs here and clean looking highs here. You could see it really clearly on the 1 hour. Look at those relative equal highs. So stops are clamping down to that area. So the expectation is that we would probably run through that. At some point today. We're in discount, so it would make sense that any pullback that got bought would run through that. So that's a hypothesis. Now, as you run over to the 1 minute, that was the narrative. And I just repeated it here. So I wrote this down as it was happening. Monday Asian session low is taken and displaces higher. This leaves an Asian session breaker with clean highs above us. And that is right here. The 9:30 tests the breaker at the 1 order block and repels off it, displacing the London highs here, right there. And then the 10 a.m. silver bullet is biased long above the clean highs. And one side note there, the reason that's important or valuable is because we didn't turtle soup as soon as we got up there. We did come back down, but it's only to test the silver bullet. It wasn't actually to displace lower as a turtle soup idea. So we're low in the daily range, but not super discount. It's just discount. And the breaker test was below midnight. So we're in discount on all time frames. So that's a really important point. So notice where this time frame, this 9:30 test comes in. It's below midnight. It's in relative discount on the daily range. And look where it is relative to the range of the session. It's down in the low side of it. If you take that London high to the London low, it's down in the bottom half of it. So that's all good signals for a bullish. If the bias is bullish, those would be all good locations for buy signals, which is what we get. So as you look at the Monday, we have bullish conditions, no news. It's Monday, so there's context is forming. We have a 1 hour order block and a 15-minute breaker. And then I did sim trade that, and it was profitable. Then I took also the pullback to the 5-minute silver bullet, and then that runs back up through the highs. And I wanted it to get to this high of day, but it failed before it actually got. Excuse me. Let me say this. It comes back early, roughly 10:15, and then it reverses back through the high. So I took some more off there. And then it came back again before 10:30. And then when it failed to make a new high before 10:30, I was relatively sure it was going to come back down lower. And it ultimately did. As soon as that happened, I was done for all the sessions that I had available to me. So I just turned off the charts. And that's really the way I want to trade. Monday observations is the utter lack of breakers. There was only one. And there just wasn't anything to work with on the 15-minute except for the Asian session, which required a narrative to even see it. So if you go back to this, you can see that, yes, it's there, but you wash over top of this and you kind of think, well, why would you bother with that price? Well, here's why. Look at this. Check this out. So here's what happens. You have an Asian session that takes out its high, and then the London session takes out its low. Then, so what you would expect then is the breaker here to send us lower, because this would have been the last pivot before liquidity was taken. So you would expect this to hold, and it doesn't. So that means that this right here is a Judas swing. That means that was just meant to take liquidity. We're actually going higher. So then when we come back down, when we break through this area here, what doesn't even really need to break through, when really ultimately at any point, you could have taken that, but I wait until the 8:30 or 9:30 session to actually take that trade. And if you notice here, you got roughly 8:30. That's when this repels off of it. It bounces again, bounces one more time, and then that's when it takes off. And that's my model. This 9:30 is right directly at 9:30 on the nose. So in this case, you would have put a limit order here, and then the only way back into this is to trade additional pushes back into low time frame order blocks and breakers when it comes back, and it comes back at 9:45, 9:50, and then you run the macro up higher, up through buy side. And the reason you can do that is because buy side has not been taken yet. So that is the whole day. At 10:36 is when I elected to quit, but it looked pretty clear like the market was going to take out my stops. So this is a good example, and I'm kind of rambling here, so sorry about that. I'm kind of thrilled. Daily range low shows us a signal that we're holding. I did have an observation. Like, one of the questions I like to ask myself is there anything that's telling us we're holding higher? And one of the things I see here is you've got a fair value gap on the hourly right there, and look what happens when we test the mid of it. We run way back up here, and then you have another fair value gap here, and then we close essentially right on its mid. I'd have to go double check that. But then, and here's the important part, we reverse that. So we close on its mid and then we reverse it. So any pullback into this 1 hour order block is more than likely going to push prices higher, because this is a failed move. Why? Because we're failing to displace, and then these arrays are holding, and then they're holding at time. So they're also leaving PD arrays, which are also holding. So that's a good predictor of continuation. Okay, that is it.